This is educational, not trading or investment advice, okay? This is entertainment, mainly educational. Future stocks, bond trading of any kind involves substantial risk. You may lose everything you have. Before trading or investments, do your own due diligence. This is not a recommendation to go out and trade with your money, okay? If you do so, you're on your own. If you're watching or listening to this video, you are agreeing to these terms. Okay, let's get to it. Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel, day trading for an ROI payout. Just my trade journal market analysis. Here we are, Wednesday, December 27, 23, and it's T+2 month-end, year-end. So this is where the big boys and girls that are institutionals close the books. Even though it's not the calendar for the end of the year, it's trade day plus 2 days of settlement. So that's what T+2 is. Daily affirmation, I see it and understand. Rigid discipline and rules. Flexible in outcome expectations. Independent thinker. Impeccable risk manager. Precision-based trader. Responsible business manager. On the left, right here, we've got the Nasdaq. So 3 straight candle bars up. This was the day after Christmas. This green bar here, same type of pattern, basically for the middle chart, which is the S&P 500. And this dollar is the big thing. So this right here, this long tail down, was where at the bottom of this candle wick low, that sell side liquidity. And note how this candle right here, where we're at on Wednesday, the 27th, in Globex, we're definitely below it, and it's with a candle body, not a wick. So not sure where the dollar's going to close, but it's a pretty precipitous down slide that we've been in with the dollar, and that gives room for the equities to more or less proportionally keep this rally alive. The last thing I'll note is the 9 EMA here is on the third day of air gap between price and this blue 9 EMA not touching for 3 full days. All right, let's go to the smaller time frame. I'm going to go to the 1 hour next. This is the 1 hour chart, and here we are last Wednesday, where we had the previous week high at about 4830.75, and the candle bodies on these 1 hour candlesticks, they weren't all wick, they were candle bodies. And the last upside green candle here, I'm marking off as a rejection block, because that's the last time we had a very big displacement, really the only large displacement of December, and it went straight down. Now here we are yesterday, about an hour before the close, and you see a new high, 4834.50, and it's all candle wick, premium candle wick up. So we really didn't get up with the candle body where we were last Wednesday, and here we are Wednesday to Wednesday, but we're still in the general zone here. So this kind of has me concluding, if I really don't see great setups today, I'm not going to be probably trading the rest of the week, because it is the holiday week, and it looks like the market just wants to keep this pattern, and especially with the dollar not able to get out of the cellar. It's really down in the basement, and it's not coming up. So I'm going to watch the dollar, and I'm going to watch this zone. So let's look with the annotations. So you can see here on this light orange tan color, so this is the green, more or less, rejection block from a week ago, and you see price in the last 2 days, which is Wednesday Globex and the day after Christmas, respecting this rejection block. It's not going above it. So pre-D arrays above it is the high, the 5-minute order block, and then this fair value gap, both on the 5-minute. But this orange tan is not a fair value. Again, it's just a rejection block of the candle body before we had that big displacement. So I'm keeping this as my price action levels. And if we violate, obviously, the yellow, the red, and the high, that's to be possibly expected because of the dollar. This right down here, 48.1975, is where we had the PM low prior day, and we're way down here on 48.0875 on the prior day's RTH open, and the new week open gap even further down here below the consequent encroachment of this large fair value gap in yellow. That is 4,800.25 on new week open gap high, and the new week open gap low at 4799.25. So there you have it. These are the levels, and all I'm saying is it's going to really take a lot for this to go down here, even to hit this new week open gap. And below that, again, we have still other sell side liquidity levels in the 47s, but I'm not anticipating that necessarily happening today or this holiday week. So that's why I'm going to just play it very careful so I can enjoy the holiday New Year time. And I'm ready for this day, Wednesday, T+2. If they do want to show me a good setup, I'm willing to take it. So that's it. These are the levels. Appreciate you guys on the subscribers, original OGs. Thank you so much. And I want to welcome the new subscribers also. So thanks so much for supporting the channel. Also, if this helps with these levels, throw a like. It's absolutely free to do that. Take care. Happy New Year. 2024 is just around the corner. Aloha. Bye.